Welcome to the Ideal Investor Show. This is the podcast where we help you challenge your mindset and discover where you are. Tired of stories about other people's success? We can help you change your life, determine your time freedom point, and join us on the journey to financial success. Let's go. Hello and welcome to another episode of the Ideal Investor Show, where we bring you great content and want to help you to understand how to do investing, how to build a passive income portfolio, reach the time freedom point, and get to financial independence. And this is the next episode in our mini series about emotions and money. And what I would like to address today is actually related to market volatility and the associated anxiety. If you look at and have been a frequent listener to our podcast or reader of my articles and the content that I'm providing, you know that we have an overweight, so to speak, on real estate and residential real estate investing using turnkey providers out of state. And out of state means typically from anywhere, if you're living and working anywhere on the West Coast, on the East Coast, or in some of the more expensive cities. So in that sense, out of state. And the diversification percentages of our portfolio currently is at 65% residential real estate, 5% in Bitcoin, 10% in gold and silver coins, and 10% in stock market investments, 10% in cash. So that's kind of the diversification. Now, not everybody is set up that way. And what we're talking about, market volatility and the associated anxiety, comes from a situation where, for one, I would say a lot of people are conditioned when they're talking about investing to the stock market just because that's by far the largest market when it comes to the media. Whenever you hear something, whether it's presidential candidates who talk about new highs in the stock market and make it sound like they were responsible for it somehow, for a number reaching a certain value, or you look at CNBC and Bloomberg and all the, like financial media in writing, on TV, on YouTube, everywhere you go, when you talk about investing, the first thing that is being addressed is the stock market. So a lot of people that are interested in investing have started investing in the stock market, some with financial advisors, some through mutual funds, a lot that are employees through 401k plans where their company says, okay, here's your 401k plan and you can elect whether you want low, medium or high risk. And what that really means is low, medium or high risk in investing in stocks. Right. So that's basically where a lot of people have their money. But on the other hand, what can also happen is that you actually ultimately find out firsthand every time the market is going up and down, what's called volatility. Now, if you ask yourself, why is Axel saying that 65% is in residential real estate and that's the recommended value that I'm actually suggesting unless you're a business owner and you're investing in your own business? That is mainly because then there is no real reason for anxiety about volatility, because if real estate, especially residential real estate, is not one thing, it's definitely not volatile. Yes, it goes up and down. And if you're lucky and you bought something in 2018 and you still have it today, then in those 6 years, it wouldn't surprise me if it almost doubled in value. But that's not the normal thing. The normal thing in real estate is steady as she goes. It increases slightly above, on average, slightly above inflation. But because it is so stable, that's also what makes it so attractive, because it doesn't really provide anxiety. Now, what I'm going to tell you about is an example of a client that came to me, and she basically said, Axel, I think I need help because with my money, whenever I think about my money or whenever I open up my laptop to look at my investing accounts, I really start shaking and I'm afraid because sometimes I hear something that makes me open my laptop or look at the app on my phone. Sometimes I haven't even heard anything and I'm opening it up, but before I even see what's going on, I'm already anxious and I'm already afraid. And what it really boils down to is the question, what happens if I lose everything that I have basically invested in? We had several mentoring sessions about that. And what really actually came to light is that this kind of anxiety and fear of being wiped out came to some extent from the fact that her family, when she grew up, never really had money and always had to turn over every penny. So she felt, I need to do something to avoid that ever happening to me. And therefore, I need to save money from my income, put it aside and invest it. And the best thing she knew to invest it in was into the stock market, which kind of makes sense if you don't know of any other opportunities. And I have to also say, if you really look at the advertising situation when it comes to investing, almost everything is focused on stock market investing. Now, the other thing, especially in the last few years, if you're looking, is that we are not really getting the true information. And that can also feed that anxiety. And what I mean by that is when you look, for example, at the S&P 500, it's called that because it has 500 stocks and the best performing ones in a whole bunch of different categories, like high technology and electricity and energy production and raw materials production and pharmaceutical and so forth, all those categories, 500 companies. But when you take a closer look and you try to find out what made the S&P 500 go up as much as it did since the pandemic, basically lockdown, ended. And what you will find out is that this summary number that says, what is the S&P 500? And it's something like 4,500 or 4,700. That summary number is basically building a calculated number of the overall value and how the so-called index is performing. And that is relevant because you can buy what's called index funds where the same weighing, the same size of companies in the same distribution are basically part of what you're buying as a basket. So you're buying the index, and that's why it has this number. But a closer look would show you that in the last few years, the increase in the value was not across all those 500 companies. It was mainly the top 30 biggest companies that really drove all the value. And the other 470 companies, a lot of them didn't increase at all or actually even lost, some of them significantly. Now, what does that mean for you as an investor? If you had invested your 401k in an S&P index fund, then fine, then you would have participated in that increase. If, on the other hand, for whatever reason you invested in any of the companies in the S&P 500, you had a chance that you invested in any of those 470 companies that didn't nearly increase as much as the top 30. And if you're not an expert investor, how would you know which ones are the top 30, which ones are the bad 470, and how do you need to rotate to always be in the top? Most people don't know this. This is, by the way, as a little side note, also the reason why out of 8,000 stock market advisors and financial advisors, only about the top 200 are really having great results that beat the market. Everybody else, even though they're supposedly the expert, are doing no better than if you were just to buy the index. So back to our client, to Maria, our example, when she opened her laptop, she was always getting anxiety because she was afraid that the numbers would be red, that her investments had gone down, and that she would ultimately run the risk of being wiped out. And so what we basically did is that we learned through mentoring sessions that there was this deep-seated fear of financial instability that she had seen with her parents and that she tried to avoid. And what we developed were initially some grounding techniques. How can she calm herself down, calm her nerves down, reduce the anxiety level before she ever wanted to look at what her investments are doing and how did they perform? And that is in combination with how often do you really need to know it? And one of the things that I find, obviously, since we're focusing on real estate investing, when it comes to how our investments are doing, we want to kind of talk to our property managers every month. But when it comes to what is the value doing, I would say every 6 to 12 months is when I look at it. And the reason is I have no intention to selling them anyway, so what does it matter? And the same thing would be true in the stock market. If you invest for the long term because you want to build a stock market portfolio for your retirement, what does it matter what it is right now? You're not going to buy or sell. And well, you might be buying more, but you're not going to sell what you have. Right. So that was the other thing. We made a grounding plan, some exercises for breathing and meditation and so forth. But we also discussed what would be a reasonable frequency to lower her anxiety and get her calmed down. And then we actually looked at how can she diversify her investments? Because the one thing that I cannot take away, even if I'm the greatest mentor under the sky, is that when you invest in something that has a lot of volatility, that I could somehow take away the volatility. I can't. But what I can do is I can suggest to you to put more of your investments in things that are not so volatile, so you don't have to worry so much. And that's exactly what we did. So Maria, as far as I know, is now down to about 35% of investments in the stock market, about 30% in other investments like gold, silver, crypto, and so forth, and another about 30% in real estate, and the rest is cash. So very little cash, as you can, if you add it all together. So that's her new portfolio that has evolved over time. And one thing I can tell you is she has much less anxiety, and she has much more a feeling of control and freedom while she is still following her goals. And so that's really an important thing. If you find yourself getting anxiety or nervousness or the shakes or jitters or anything like that when you're thinking about your investments, then number one, I would say, please seek out help. And I would love if it were me to help you. And if you want to make the first step, go to idealinvestorshow.com, find the button to book a call, and let's start that conversation to see how might I be the person that can help you. But if it's not me, then it should be somebody else that you can talk to, somebody obviously who has knowledge about finances and investing and money and how to grow it and how to actually ultimately help you to get to financial independence and financial freedom. But get help and consider, if you just sit down with like whatever beverage of choice you have to calm yourself down and ask yourself, do you really want to have this feeling, those anxiety attacks and stuff like that? Or can you just by changing the weighing, the distribution, the diversification of your portfolio get to a point where you won't have that anymore? And I can tell you out of experience and with many, many, many clients, yes, you can. The only thing that it takes is for you to take the first step and seek out help and create a good relationship with somebody you trust. And then you start getting to work and change your portfolio so it is a joy. And you're anticipating in a positive way to look at what it's been doing. Not on a daily, weekly, or monthly basis, but maybe 2 or 3 times a year. So that's it for today. I hope this was educational. Be well and stay safe, and I'll talk to you tomorrow.